The dollar Swiss moved to the lowest level going back to 2011 and trading yesterday, taking out the 2025 low in the process. Since then, the price has waffled, consolidated, moved up a little bit. I'll talk about the technicals that are driving this currency pair in this video, so let's get started. Looking at the price action off the hourly chart, the last two trading days, prior to trading days, seen big sharp moves to the downside. Well, a little one there and a bigger one in trading yesterday with selling just taking the price lower and lower and lower. That took the price below this low price going back to July 1st at 0.78714. And in the process, as mentioned, that price moved below to the lowest level going back to this point right here, which was September of 2011. So a 14-year low for the dollar versus a Swiss was reached just yesterday in this pair, and that's significant. But we have seen a rebound in trading here today. That took the price back above the low price going back to the beginning of July, and we are currently trading just right at that level, as a matter of fact, at 0.7871. So the market's trying to figure out what it wants to do now. You might get some clues from the 5-minute chart, actually. If you look at the 5-minute chart, you can see this trend move over the last few days. And note here how the price fell below the 100 and 200 bar moving averages here. It was consolidating up here, causing those two moving averages to come together there. And then we moved below it. And note here how this thing started was with the price following below the declining 100 bar moving average. Now the price ended up moving above the 100 bar moving average here and went up to test the 200 bar moving average here. We actually moved just a little bit above that, but then we fell below the level, and the momentum started to increase through here in trading yesterday. That was the clue. There was a little failure up here, but sellers returned and pushed with momentum to new lows below these lows right through here, and that got the ball started to the downside. The corrective move right here came up to the 100 bar moving average. It wasn't until today, after testing that 100 bar moving average, that the price finally moved above that level. That gave traders a little bit of a clue that perhaps there was a correction in the working. And then we came up to the 200, stayed below that level. But when we moved back above this level, we started to see this price action up and down, up and down, up and down as the market tries to figure out what it wants to do. So this may give us a clue for the short term. You can also put a Fibonacci retracement on the move to the downside, and oftentimes when you do that, you want to see the corrective move start to move back up toward the 38.2% retracement. And if you can't get above that 38.2% retracement, then are the buyers winning? No, they're not winning. They're still set. The sellers are still in control. So keep that level in play on the top side if these two moving averages can hold support. Now, admittedly, the price has been above and below it, so it makes it a little bit different. That's what happens after the market trends. It tends to non-trend, and then it figures out what it wants to do next. So that's my look at the dollar versus Swiss. I hope it found you interesting. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.